Well, good day there, subscribers. Today we're going to do a stock market for beginners type video. We're going to talk about 5 mistakes you absolutely have to avoid in the stock market. This is kind of like a stock market 101 type video where I've seen a lot of people over time, unfortunately, make a lot of mistakes in the stock market. I'm just trying to pick out the biggest 5 here so you guys can avoid these and avoid losing yourself a lot of money, all right? So I hope you guys enjoy this. Make sure you hit a thumbs up as always. By the way, today's video is sponsored by my private stock market membership group. That's linked down there in the description. I think I have a discount on it for you guys here today for watching this video. That will accelerate your learning in a massive way if you're newer to the stock market, if it's something you're just looking into, or you've been in it for a few months now. That should accelerate your learning. There are hundreds of videos to learn from in there. Also, I have a real money account in there that's got actually reached a new all-time high here today, about 219,000. You get to see every single trade I make in that account, every single buy order, every single sell order. So I think it's definitely a great value for you if you want to join there. It's linked down there in the description, all right? Alrighty guys, first mistake up here is buying something you do not fully understand. This I see a lot of times in the stock market where somebody might hear somebody's buying a stock, whether it be me or whether it be somebody on TV, on CNBC or Bloomberg, or whether it just be a friend, a family member, somebody, they're buying a stock and this person's like, oh yeah, I'm so excited for this stock because blah, blah, blah. And then somebody else says, wow, that does sound a little exciting. I don't really understand everything that's going on here, but let me open a brokerage account or let me go into my brokerage account and let me put some money in that stock. It's just a big mistake you guys don't want to make, okay? If you don't fully understand something, don't buy into that stock in the first place. Can you get lucky and maybe it does go up a ton, you make a bunch of money on something you didn't understand? Yeah, you could possibly get lucky, but I'm just telling you that's not the way to do this game, guys. Most of the time what will end up happening, you'll lose money. 1, because that stock might not go up over time. 2, because guess what? That stock might go down in the short term and you'll probably sell because you don't understand in the first place. Let's say you put $1,000 in it and all of a sudden it goes down to 700, all of a sudden you lost $300 or you're down $300, you're gonna probably get really scared because you're like, I don't even know this business. Could I lose all my money? Is it going to go to zero? If you don't fully understand a business, guys, don't invest in it. I don't care who said it. I don't care if it's Warren Buffett. I don't care if it's me. I don't care if it's a guy on CNBC, somebody on the internet, somebody on Seeking Alpha wrote an article. If you don't fully understand a business, don't buy that business. And the best way to understand a business fully is read through the 10K annual report, which is on every company's investor relations page. That's the best report that if you don't really fully understand a company after reading through that report once or twice, might not be a company for you and you might just want to move on to the next one, guys. That's mistake number 1. Mistake number 2 that I see from a lot of beginners in the stock market is they will invest too much money that they don't feel comfortable with. Always make sure when you're investing in the stock market, especially if you're in your first few months of doing it or your first year in general, make sure you're investing amounts of money that you feel comfortable investing, okay? Even if it's only, if it's $100 and that's what you feel comfortable with at a particular time, then make it $100 if that's all you feel comfortable with, okay? Don't risk too much money. What I hate is sometimes I'll see people, they'll have their life savings, okay? Let's say they've been saving their whole life, let's say they're 40 years old, and they're like, dang, man, I want to start making my money into money. This sounds fun, and they see, something that excites them in the stock market, right? And like, dang, I've been saving my whole life. I'm 40 years old now. I got 100K saved, and they stuck that whole 100K into the stock market, and that's just a bad decision, guys. Invest enough that you feel comfortable. Invest, smaller amounts at a time. This is why I think it's really good to start young when you don't have much money. When you only have a few $100 or maybe a couple $1,000, if you lose that money, and hopefully you don't lose that money because you invest in actually good companies that are in the S&P 500 for the most part, or at least a Russell 2000, you're not playing around, penny stocks or something like that. So you shouldn't usually lose all your money. It's pretty unrealistic. But let's say you do. Let's say you do lose all $1,000 of your money you invest or something like that. That's not going to change the game for you. However, if you're 40 years old, your whole life savings is $100,000, and let's say you invest that in some stocks and it goes down to $60,000 and then you sell out for losses, you just lost a lot of your net worth, $40,000, which could mean a lot of money to you. So don't invest more money than what you feel comfortable with. Make sure you feel comfortable, and over time, you should feel more and more comfortable to invest bigger amounts of money. Most of my net worth is invested in stocks in my different stock market accounts. I feel very comfortable having most of my net worth invested in stocks, but I've also been doing this for 10, 11 years now. You might be in a different situation, okay? Invest what you feel comfortable with. And mistake number 3 is buying a stock just because it has a huge dividend yield. Basically, dividends, I have dividend videos on this channel, by the way, you might want to check out. But a lot of people get excited when they look into the stock market and they see dividend because they think dividend, that's like guaranteed money that's paid out to me. Oh, an 8% yield. I get to make 8% of my money a year, 10% of my money, 12%. They see some of these high yielding stocks and they research them and whatnot. I'm just going to tell you guys, especially a lot of those high yielders, the 8% yields, the 10% yields, the 12% yields, the 15% yields. Sometimes those companies are very bad companies and they'll end up cutting your dividend and your stock will go down way more than what you actually make back in dividends. If you're dividend investing, that's a great thing. There's nothing wrong with that. But make sure you're investing in dividends in companies you fully understand, that are very profitable, and that don't pay out all their money in the form of dividends or something like that, guys. Those are the type of companies you actually want to invest in that pay more reasonable yields, like a 2% yield to, let's say, 5% yields. Those yields are usually more normal. If you see a company paying an 8%, 10%, 15% yield, just like in your mind have bells going off that something's probably wrong. I see it time and time. Like my first investment I ever made, well, I think my first investment might have been Walgreens stock because I technically worked at Walgreens. My second investment, the one I actually picked a stock, was this biopharmaceutical company that paid, I think, like a 10% dividend yield or something. And it got me real excited because I was brand new to the stock market. This is like 2008, 2009 type time. And I'm like, oh, it pays me 10%. And guess what? The stock, even though I got the dividend money, the stock went down to the same as the dividend. So I really never made money on the stock. And a lot of times you can actually lose a lot more money than what you get in dividends, okay? Don't get too excited about dividends, all right? Number 4 is not averaging down on positions, especially if you're talking about great companies you invest in the S&P 500. What I'll see is a lot of times people will buy a stock. They might put, let's say $1,000 in a stock or whatever, and that stock, let's say, goes down 10%. Next thing you know, they got $900 or whatever, right? Instead of buying more, they either sell a position or they don't buy any more, and it's like, okay, you thought that stock was a good deal. Let's say it was $10 a share. It goes down to $9 a share. That should probably mean it's a much better deal now, unless a business is totally different than what you had expected when you invested in it. It became very bad. Management like totally messed up the company or something like that. Unless it's a situation, which those are far and few between, especially with the S&P 500 companies, it probably makes sense to buy more. I see time like one of the magic things about value investing, whether it's my investing approach or Warren Buffett or whoever out there, okay, is when you go down in a position, you generally speaking want to buy more as long as it's not a super speculative company. If it's a very profitable company that has a great business model that's proven, it's a company that's in the S&P 500, more than likely over time that company is going to go up a lot over time. But sometimes in the short term it goes down. It takes a 10% dip, sometimes a 20% dip, a 30% dip. And what I'll see is an Apple or Google or Facebook or Amazon. A lot of these stocks will dip, right? Especially sometimes after investors will invest in them, and they'll either sell their position or they won't buy more. These are great companies that over time, what do? They go up and up and up. So somebody buys in, they're like, oh, this stock's undervalued. It's a great stock. I'm making a lot of money. It goes down 10 or 20%. And then they're like, maybe I'll sell, or maybe I don't want to buy anymore. And it's like, that's just not value investing, guys. Averaging down on positions is how you can make a lot of money. So many positions I've held probably most of the positions I've held over the course of my 10 plus years of being invested in the stock market were averaged down positions that ended up making very nice profits, not because of the first initial shares I bought necessarily made a ton of money, but the shares I bought when the stock went down 10 or 20 or 30% ended up making me a lot of money, okay? Every once in a while, you might get in a bad stock, but as long as you're avoiding companies that are unprofitable, you should be making a lot of money, and especially if you're sticking to a lot of S&P 500 great companies, guys. So that's a big mistake I see. In number 5, this one, you might sound a little silly, but if you're getting in stock market only for the money, it's not the place for you. If it's only about the money, it's not the place for you. Now, being a stock market investor, obviously, we like the money, right? Like that's awesome. We get to make money. We get to make dividend money. We get to hopefully sell out our shares for big profits in the future. It's awesome. Money, 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 and we get to build that money, and it's a wealth building game, and it's a lot of fun. But if you're only getting in this because you're attracted by the dollars, and that's the only reason, I'm just going to say it's going to be hard for you to be a successful investor over the long term. You've got to really have some passion for this. You got to really love looking into businesses. You got to love reading 10Ks. You got to love reading 10Qs. You've got to love listening to conference calls, reading about that business, researching that business. If it's a business that they sell products in physical stores, going to those physical stores, doing channel checks, all those sorts of things. If you don't really love that, you're looking on Google News for any news articles written about your company. If you don't love the process, I'm just going to tell you, you're probably not going to make money over the long term in this game by picking stocks, okay? And there's nothing wrong with that. Just put your money in an index fund that tracks the S&P 500, and guess what? You're probably going to make good money over the long term, and you'll probably do fine for yourself. But when it comes to picking stocks and actually saying, got $2,000, do I want to put it in Apple stock or Google stock? When we're talking about that, you got to have passion for this, guys. If it's only about the dollars and the cents, I'm just telling you, over the long term, you will not make money in this game. You'll probably lose money because you're not going to do the research work necessary to make sure you're always in the best positions possible and to, obviously maximize your dollar amount. So make sure there's actually some business passion that you love looking into companies, researching and things like that. If it's not there, it's not there. There's nothing wrong with that. It's a freak thing, okay? I would say probably less than 1% of the population legitimately would enjoy year after year after year reading 10Ks and 10Qs and listening to conference calls and researching companies. Probably less than 1% of the population. So just understand, if you're not in that less than 1% of the population where you find that stuff interesting and fun, it's no big deal. It's no big deal. It's just probably not for you. You can just invest in an index fund. Nothing wrong with that, guys. Hope you enjoy this. As always, make sure to hit a thumbs up. I hope these, avoiding these mistakes for you guys will save you some money. Thank you for watching. Have a great day.